Hey everybody, and welcome to the PlantStock channel. You're here with me and Mayur. We're going to focus today on the expectations that we have for Oatly's Q1 that is coming up tomorrow, guys. So that's going to be today's topic. Mayur, how are you doing?
Hey, Jesse, good to be back.
Yeah. All right, guys. So first of all, before we get into this, guys, as always, disclosure here that this is not financial advice, whatever we're talking about. So keep that in mind. It's just two friends interested in stocks, and basically do your own due diligence if there's something you're worried about. And also, before we get into it, as always, if you feel like liking this video, do that and subscribe to the channel if you are interested in companies that has to do with changing the planet and changing, hopefully, for humanity as well and the animals. And then if you want to join our free Discord channel, take a look in the description. All right, so we've felt like let's just begin looking at Oatly, what they got in their latest earnings, right, back in March for Q4 in 2020. But the Q4, they actually beat expectations there with almost $8 million, guys. And the revenue was about 185, almost 186 million. And this upcoming quarters now, tomorrow, guys, is estimated to be lower, about 161 millions. And we're going to talk about why they estimated it to be lower. And I thought it'd be interesting also to take a look at the estimation for the whole year of 2022. The revenue estimates average from basically Wall Street is almost 900 million, 891 million, with a great forward PS of 2.44. The low estimates is around 833, and some high are at 915. So that's how it looks right now. So, Mayur, what do you think? Can they beat these expectations?
Uh, so based on my calculations, I think they're going to come right in line with what analysts are expecting for Q1, as well as what analysts are expecting for the full year.
Yeah.
So I ran a bunch of numbers, and I can share my spreadsheet here, um, so that way we can take a look at exactly what is happening. So here's my financial model for Oatly. Just have a couple of years here. These two columns are both annualized numbers for the revenue, cost of goods sold, gross margin, things like that. So there's that, and then I've got 4 quarters of 2021 listed here, and then the full year 2021 is in this column right here, and then here are my estimates for Q1. So if you recall, going back to the shareholder deck from Q4, they had actually for a slowdown in production
Yeah.
in Q1.
Yeah.
So they did, kind of prep everybody so that it doesn't come as a big shock, but they are guiding for reduced production at 120 to 125, million liters of oat milk production for the quarter.
And why is
This
that?
is this is attributable to partially because of China's zero COVID policy right now in that's been going on during Q1, and also with ongoing issues with regards to production volumes reaching max capacity at their U.S. locations
Yeah.
in Ogden and New Jersey. So this has been one of the reasons why Oatly stock has been under pressure a lot. Is that they still have yet to show big execution on their new production facilities in North America.
Yeah.
So that's why they knew that this was coming, and they just went ahead and just guided, everybody, Wall Street analysts, everyone, that we're going to taper down our expectations, but still pretty good growth year over year. If you look at the volume of Q1 of 2021, that was at 90 million liters. So we're looking at growth of at least 33% year over year, if they hit these targets here. So what I did is, in terms of my forecast for the quarter, I said let's take their upper end of this range, because I do feel like Tony and company likes to be a little bit conservative with their targets.
Yeah.
So let's just give them the benefit of the doubt, and they do roughly 125 million liters of production. I think finally Ogden might be, going. So I'm giving them a little bit of credit, with regards to that.
Yeah.
I am seeing, for example, because remember, early in the quarter, I did see Oatly basically being out of stock at all my local stores all the time, and now they're much more in stock now.
Yeah.
So I'm not seeing shortages as much as I used to before.
And I think that's
Now
an
this is
that's an important discussion also to have that in our Discord, and I've seen other really large Discords out there and platforms. People keep posting that it's empty in different stores, and a lot of people see that. And I know it's same with Tattoo Chef and other products and other companies, and people normally see that as a bullish sign that that's kind of proof that they're selling like crazy. But I think
Mhm.
that's probably a simplified way of looking at it. I think it's fun to do that. It's fun to be part of it, but like you talked about, maybe it has to do with supply chains also and supply
Mhm.
issues.
Yeah, exactly. There's been an ongoing trucking shortage in the U.S. I think that somewhat is resolved now. Global supply chain disruption. So these are all very broad, big picture items that's causing these delays. But really, more importantly, it's weighing on margins. So that's one of the reasons. But this reduction in production is what I'm factoring in for my Q1 expectations. So I think hopefully on the call we get some update on their Ogden and New Jersey facilities, and if they show strong guidance on that, I think there's going to be good lift to the stock. But for the quarter, I'm assuming 125 million liters of production, and if we use the prior revenue per liter, right? So for both in Q3 and in Q4, they were generating roughly $1.31 per liter of production.
Yeah,
So I'm holding that steady into Q1 of this year.
right.
So if we assume 125 million liters of production and they generate roughly $1.31 in revenue per liter, then that gives you exactly $164 million revenue for the quarter.
Yeah,
So that's slightly above the average. The average analyst estimate is 161 million,
yeah,
but below the high estimate, which is roughly 167 million,
yeah.
and way above the very low estimate, which is 154 million. And that's being pulled from roughly 8 analysts that cover the company.
Well, that's actually good that they
So,
are quite conservative, everyone at this point to some extent, both the company itself and several of the analysts.
mhm. Yeah, exactly. So that's the good news, is that I do think that they're going to beat on the top line, 161 versus 164. However, the sort of good news in terms of the quarterly numbers ends there. Because I think that we're going to have a very bad gross margin for the quarter. So my expectation is 10%, 10% gross margins for the quarter.
Oh,
And that would basically mark an all time low for the company. And so why is that, right? Why should it drop that much? Remember, they reported 16% gross margin in Q4. I think it's going to be even less than that. So they said that on the call, on the Q4 call, they specifically guided for gross margins to get even worse in Q1 than they did in Q4.
yeah,
And so that's why I'm expecting 10%. And it's very obvious because remember, this reduction in production is uh, coming with existing factories. So that means that existing factories are running well below capacity. And what that does is that when you have existing factories and less production total, then you're getting less fixed cost absorption. So that's kind of in finance world, it's just a fancy way of saying your revenues have gone down, but your costs have remained the same. When that happens, margins reduce dramatically.
yeah,
So with this drop in production, there's going to be a drop in revenue, and because remember, this is a company that relies heavily on production at factories, right? And so there are a number of fixed costs. There's depreciation. There is worker salaries that still have to be paid, regardless of whether you're producing, 150 million liters or 100 million liters,
Right.
right? So your costs mostly remain the same, and revenues are much lower. So that's why I'm expecting a hit to gross margin. So that should be down to 10%. Hopefully that isn't, too optimistic, because there is a chance it could be even lower than that. Um, and here we can see, costs basically remaining the same. I'm expecting SG&A to pick up to 120 million from 119 million from last quarter.
Yeah.
Expecting roughly flat research and development costs. So your overall operating loss is going to be about 108 million dollars, versus 92 million in the prior quarter.
Yeah.
So it is going to be a steeper loss, than before.
Yeah.
So overall, my expectation for earnings per share, is minus 16 cents. That's down from minus 14 cents last quarter.
All right.
So it's going to be a tough quarter. I think, hopefully, Tony and company and Christian guided for that. And so I think, Wall Street is kind of expecting that. But my expectation for the net loss is a little bit wider than the consensus. So the consensus is roughly a minus 14-cent loss, and I'm at minus 16 cents. So, it is going to be slightly steeper than that, but I'm not sure if that's necessarily going to hit the stock too much, because Oatly is really not just, judged on earnings per share as of right now. As a cash burning company, they're more judged by revenue. So hopefully the revenue beat, doesn't send the stock, down too much
Right.
on the results.
Yeah, it's kind of hard to believe that it can actually go much lower than now. But then again, that's been said several times of other companies out there that you can't see it going lower. But considering the price to sales ratio right now, it is extremely attractive, I would say.
Yeah,
Given,
it's very very well priced. Now that doesn't mean that it can't go lower, because there are other companies out there that trade for even lower multiples than Oatly,
yeah,
and they have similar growth. I mean, there's, apart from Teladoc, which got just flatlined, right, 50% down. That's a little bit of a different story. But even other companies that are like software companies with software margins, like 70-80% gross margins,
yeah,
these companies are down 50, 60, 70, 80, 90% from their all-time highs. So, if those companies go down, then, what's Oatly, right?
exactly.
So, we will see what happens. I do think Oatly is trading at a very attractive multiple now. Um, but I don't think Q1 is going to be enough to really send the stock rallying. Tony has to come out very, very confident in their prior guidance of 900 million liters of production. I'm expecting $945 million in terms of, total revenue for 2022. So we will see if that happens. But a big part of that is dependent on China as well. They need to get their China factory up and running. So hopefully this COVID disruption ends, soon, and
So,
they can get back to production there.
all right, guys, there you have it. Again, when it comes to this company, like every company we basically believe in, it's a long term situation, right? We're talking 5 to 10 years in the future. And that's why normally I would say neither me or Mayur would panic at situations like this. This is short term noise, but maybe noise that you need to maybe care about somewhat. You need to stay updated. But again, if you have a 5 to 10 year perspective and you really believe in the company and you understand the company, you see them being profitable in the next couple of years, then I would say you're good to go. But always, again, do your own due diligence. All right, guys, that was it for today. Truly hope you got some value from today's video. And if you did, again, like and subscribe, guys. And feel free to join the free Discord channel if you want to connect with Mayur and me more. All right. Thank you for today, Mayur.
All right, sounds good.
All right.
See ya.